Hey everybody, it's Jeff back with another weekly installment of the Silver and Gold Market Update. And in these videos, I give a weekly update to physical premiums, the paper markets, and most importantly, the hedge funds. So definitely subscribe so you could stay tuned to these. These are really important if you stack silver or gold just to help you buy smarter. The key factors affecting the market this week, really the most important was a major fund reversal in gold. And what I mean by that is funds actually bought gold heavily. And the first time in months, actually, really since the peak back in August, they'd been steady sellers all the way up until last week. And I think they shifted a little bit of that to silver and maybe even more to Bitcoin. But it felt like in the air, the paper market shifted to be actually net bullish gold, which is a very good thing to see. Equity markets were choppy. Overall, it was a quiet week. But there were some notable things that happened. Amex is running a sale on their Silver Eagles, which is an interesting sign that they were dropping their premiums by $2 an ounce. I get the sense that silver stackers, really anyone who buys silver, it's weighing on them this huge premium. And I know probably the fair price of silver is $32 to $34, and that's just simply the paper market that's out of whack. But there is a psychological element to paying $9, $10, $11 over spot that's just difficult to swallow. I mean, you think about that's a 30 to 35% premium to silver. That silver spot price would need to rally just to match that. Now, where this goes from here, I don't know, but I think it's perhaps a bit of a telling sign that demand for physical silver is slowing just a little bit. So let's jump right into the silver week over week. As you can see here, silver prices inched higher, although largely have been in a very similar range around this kind of mid 25s to mid 27s for about the last 4 or 5 weeks here. And then funds did still liquidate, but not much, just sold 1,000 contracts. But as I mentioned, Amex is actually running a sale at $9 over, which amazingly is cheap considered to their previous history. And I was watching the Stacks and Bowers auction that ended, and they had a fair amount of silver in their bullion sale this past week. They had some monster boxes, and those monster boxes ended up selling for around $33.50 an ounce when you break it out over the 500 coins. So it seems like the market is willing to absorb this kind of $7 to $9 premium, and maybe 11 to 12 is just too much. Looking at the chart, again, it really is in a choppy range. We broke that trend line. In a perfect world, we'd love to see spot silver trade back above 2750. That would definitely be a bullish chart because it would be a failed breakdown. And I don't know if we'll see that as the physical market's kind of reflecting. Maybe the two will meet. Maybe we'll see spot silver drift higher as premiums drift lower. I don't know. Or maybe silver's just kind of choppy for a period of time as the relative demand for the physical is slightly slowing just a little bit. Looking at the dollar, I mean, again, this is another choppy week, so I don't want to make too much of choppy weeks. That's one thing I've learned in the markets is everybody wants a story, a reason why small moves happened. And honestly, there's not always a reason. Sometimes it's just the market shifting around their positioning and no fundamental changes really happened. The dollar index is a major impact to gold and silver. As you can see here, it essentially is off its lows, which is impressive given that we passed another $1.9 trillion stimulus. And one could argue that originally the market anticipated an even bigger stimulus than 1.9 trillion early in the year 2021. And by not getting that, that was somewhat disappointing to the massive bear position that was placed on the US dollar, and we've drifted higher. So where we go from here, 92.5 on the index is certainly an important chart point. If we break above that, maybe we continue to see this slight shift to trend higher. And if dollar index does go up, that will certainly have a headwind impact on gold and silver. There is one other notable thing about the US dollar index is that it's based against the euro mostly. It's world currencies all go against US dollar, but the euro's the biggest impact. And right now, I think the European finance ministry is seeing the success that the U.S. Economy has had, mainly due to the money printing, and they're starting to print the money themselves. So it's kind of a competition, and on a relative sense, as we're slowing down the money printer machine and Europe is ramping it up, that could have a net bullish impact on the dollar as people flee the euro, and again provide some headwinds to gold and silver. So kind of summarizing silver here, the physical market premiums are at least kind of appearing a little bearish. I'm not going to be all out bearish on silver, as we're still $9 to $10 over at APMEX, depending on the sale. Maybe the real market is trading closer to 8 over for most people, but the fact that we're drifting down does lead me to believe that maybe demand is slowing just a bit. The hedge fund position, I would call it more neutral at the moment. They've liquidated a huge percentage of their length, which is bullish in that sense, that there's less to sell, but they just don't seem that interested in buying silver at the moment. And the dollar index at its current state, I would say, is neutral, and we're just going to have to sit and watch to see which direction it wants to go. And the charts are, again, mainly neutral. We're just chopping around here. Looking at gold, this again was the key factor. And I mentioned last week that I'm a huge fan of long gold paper market right here, simply because you look at previous week, March 12th, gold prices were actually up $26 despite the funds selling. That is a huge win in terms of paper prices. And we continue to see that trend. And as you can see, the funds reverse path, and they actually bought 11,000 contracts this week when paper prices were up $20 an ounce. And premiums largely stayed the same at APMEX. But this is interesting. At JM Bullion, you can get a $65 savings for the same 1 ounce random year BU American Gold Eagle. So clearly, APMEX is way out of the market. There was some non-proof gold that did sell at the Stack's Bowers, and it was closer to the JM Bullion price, more around $110 to $120 an ounce over. And so APMEX is clearly out of the market right now. But I also get the sense they don't have a ton of supply, so they're kind of putting the price where they want. Whereas in silver, maybe they kind of got suddenly an influx of supply, and that's why they're running that sale. Looking at the paper charts for gold, again, you can see prices kind of bottom there. The key, though, will be a break back above that orange or the purple horizontal line here, which is right around 1775. That is a really important level to break back above. When we failed and broke below that key support, and now we're going to retest it, this really is the key factor. If the market can't break back above, it's considered a failed rally from a technician's perspective, and you could see paper prices trade back down from a chart alone. But if we could somehow pair what I talked about with the funds buying and break back above 1775, that would be both fundamentals and technicals aligning on the bullish side and be very positive to the gold paper price. So the key factors affecting gold, the physical market premiums are kind of neutral at the moment, and the fact that APMEX isn't running away, but obviously you can get cheaper gold elsewhere, and I would highly recommend not buying at APMEX. The hedge fund positions are very bullish at the moment. Those are the most optimistic thing for paper prices. Again, the dollar index is neutral, and charts are neutral with some optimism. So we got to root for gold to trade firmly above 1775, and we could be off to the races there. So that's all I have. Thanks for checking that out this week. Take care.